Welcome back to the Financial and Investment Education Channel. This is Larry coming to you from beautiful Rio de Janeiro. As you can see, we're having a wonderful day here, and I hope you're having a fantastic day wherever you are today. So, today I'm going to discuss 9 investing tips for beginners. So, let's go.
The first thing you need to do is set goals. Understand what your priorities are. Okay, so this is rather a simple initial kind of mind test at the very beginning. So really determine whether you're investing for the short term. So for example, if you want to save up to buy a car or a down payment for a house or something of that nature, or it could be something as simple as putting some money aside for a year for a dream vacation or going away. And I know obviously after coronavirus settles down a bit, a lot of people will be traveling, so there'll be a lot of people saving money for that purpose. But there's the long-term investments, which is really geared towards saving enough money for your retirement. Okay, so this is very, very important to understand whether it's short-term investing that you're interested in or long-term investment, such as your retirement. Now, the second tip that I have, tip number 2, is all about paying off high percentage or high interest debt. Okay, because if you're investing money and you're getting a return of say 6 to 8%, yet you're paying MasterCard or Visa bills that are charging 19%, you're really falling behind the curve. So it's a very good idea to pay off your high interest debts. Now this does not include a mortgage or something that is similar to a mortgage, whether it's a property, investment property, or where you actually live, because essentially mortgage is an investment itself into a house, a property, which really is expected pretty much here in Brazil to increase in value. I can tell you over the last couple of years that the value of real estate in Rio de Janeiro and Sao Paulo has been unbelievable, actually throughout the entire country. So people that were paying that mortgage, their property value has been soaring. So that's one of the exceptions I would make. But if you have high percentage loans on cars, credit cards, get that paid off. That's going to be critically important for your financial success in the future. And in fact, if you can avoid debt altogether, that's magic. That's perfect. Okay, so the third tip for investing for beginners is you got to think about what you know. So for example, invest in what you know. So if you're working in an industry, or if you have a lot of knowledge about a specific industry or sort of a group of industries that you're very interested in, and that could also be sort of subdivided into ethical type funds or funds that do not hurt animals, for example. So really kind of maybe write down a few bullet points of the type of investments that you would be most interested in, because you'll find that within a couple of different industries there's a lot of different options for you available. So get clear on sort of where you want to invest your money and what type of industries and what kind of type of investments that you're going to be able to sleep at night. For example, I'm short story here. Let's use Elon Musk's company Tesla. There's a lot of people that have invested in Tesla, and the stock had really soared, but then it dropped, and and then it soared again. It's a bit of a volatile stock because Tesla cars didn't really perform very well in the long term because of the quality issues that they had, of course. But those investors were also looking for a return on an environmentally safe or an environmentally friendly type of investment. Tip number 4, diversify your investments. Okay, so the first investing tip that most financial professionals like myself give beginners is to diversify their assets. So essentially, basically, don't put all your eggs in one basket. Don't just invest in individual stocks. Don't be taking advice from the guy at the end of the bar saying, hey, I got a hot, stock tip, because 90% of that is usually ends up in disaster or failure. I know, I've been around for 22 years in this business, and stock pickers essentially that are armchair quarterbacks or amateurs, if you will, they usually lose. And so, really diversify your investments. You want to make sure you have, diversity, types of assets that you buy, the sectors these assets are tied to, as we discussed in tip number 3, and even the geographic location of those investments. So just like some assets are riskier than others, some markets also come with some risk and higher returns. So we call those value investments. And that is to say that when you're investing in small cap companies or startup companies, they could return you a lot of money in the short to medium term, but they're also carry with it the equal and opposite possibility that you could lose a lot of your money in those type of investments as well. So emerging markets like Brazil, for example, were considered a little bit riskier. However, there's so much opportunity here on the up end as well. But what a lot of people don't realize is that Brazil has some very exceptionally safe investments with a lot of downside protection. So, assets from established countries like United States and Europe usually do very well in the long term, and might be even safer. But you might also earn lower returns over the long term. So, for example, in Canada, where I worked for 21 years in this business, we were very happy to be able to give our clients about 6% return on an annualized basis. So when you compare that with some of the returns that we get here in Brazil, it pales in comparison. But again, two completely different markets, and two, I would say very, very different investment approaches for the population of both countries as well. So, okay, let's move on to number 5. So what we want to do is we want to keep the fees very low. This is tip number 5, keep the fees low. So mutual funds or investment funds, index funds, ETFs, which stands for exchange traded funds, which basically mirror the indexes, the major indexes and industry indexes and so on and so forth. These could be very diverse but also very safe as well. So you can start saving on a regular basis, whether that's weekly or monthly, and you can even set it up so your bank automatically deposits money into these buckets of investments automatically. So, but when you're investing, there's another very important thing to consider: the fees that are attached to those investments. This may not seem like your typical investment tip. However, beginners often forget to take fees under account. So essentially, when you're talking to an assessor or a financial advisor, the fees and the cost of your investment should be discussed up front. Certainly, if you talk to me here in Brazil, I go through an entire investment policy statement, which is completely transparent for what the client is actually getting into. And I will say that the fees are fairly low here in the country of Brazil for all types of investments. Now, mutual funds or investment funds, equity funds, these are typically called investment funds or mutual funds. These are really just like a basket of big cap or medium cap stocks, again, crossing different industries and different locations geographically, and they are actively managed, unlike ETFs or exchange traded funds. So you might think 2% of a fee on those investments is not much, but when you add it up over the long term, 5, 10, or 20 years, it really adds up. So let's move on to tip number 6. Create and maintain an emergency fund. Now, this is good advice for anybody. So essentially, what is that? That means putting aside between 3 to 6 months of your monthly income. Just park it in a savings account, or what we call here in Brazil a poupança conta, and basically that's to serve you, that cash, which is very liquid, is to serve you in case of an emergency. So you might get terminated from a position, you might have a medical emergency where you'll need those funds immediately and on hand. Now, some people do use a credit card to do that, but then again, the credit card interest is very, very high, so you might want to avoid that. Okay, so that tip number 6 is to have the cash available in a savings account for any kind of emergencies that might creep up. And that's the rule of thumb is really between 3 to 6 months of your monthly income. So if you lose a job, for example, you can survive for that 6 months while you reposition yourself or refresh yourself and go out there and get a new position. Okay, tip number 7. So this is all about rebalancing and reviewing your portfolio at least twice a year. I know with my firm and my position, I do it a little bit more often because of the coronavirus situation. Things have become very uncertain for a lot of people, so I offer really a quarterly review and a rebalance of people's portfolios. So when you do decide to invest, that asset allocation kind of reflects your risk tolerance at the very beginning of your investment journey. So if you're a little bit younger, you might hold a little bit higher risk type assets, and but the riskier portfolio will likely be compounding with higher returns over time. But after setting your preferred asset allocation, whether it's you're young and a little bit higher risk, for example, you should be rebalancing and checking in with that quite often. Now, the simple strategy can yield a small increase in returns and decrease the volatility. Now, on my particular team, and I'm not trying to use this as a commercial, but on my particular team, we have a whole team of analysts in Sao Paulo, which is always studying the market movements and everything that's going on, and tweak and basically modify the portfolio slightly. And then it's me that goes out and communicates to my clients, for example, to communicate exactly what's going on and perhaps make some suggestions to move slightly in a different direction if we see some red flags up ahead. So tip number 8, don't try to time the stock market. It is a fool's game. A lot of people are trying to pretend that they're professionals, that they can time the stock market, and I can tell you, you can watch as many technical charts as you possibly want. You can spend all your time playing that amateur game, but don't try to squeeze out every percentage of return from stocks by trading and analyzing and all those type of things. And I gotta tell you, it takes a long time, a whole team of people, of professionals that are absolute experts in order to make the right adjustments for the market conditions at any given time. Don't try to do that yourself. So pick investments in companies that have great products that you love and will be around forever. Okay, so tip number 9, last but not least, is stay committed. Okay, so there's a fear factor when it comes to investments, and there's also this sort of reverse psychology that happens when people are investing, and it's a very unfortunate situation. Number 1 is that if the markets have some volatility, just stay committed. Look, you set the goal in tip number 1, and if that's a long-term goal or a 5-year goal or a 10-year goal, just stay the course. Markets will be volatile, but they're always volatile upwards. Okay, so you might see some losses some months, you may see some situations that make you feel uncomfortable. That's why I'm here to communicate with you, why your financial advisor or assessor is there available for you to communicate with you through those turbulent times. And it is to remember the goals that you set at the beginning, because essentially if you're in it for the medium to long term, those volatility, I mean, quite frankly, I would say just ignore. It's not very scientific, but It's a good practice when you've set an investment goal to kind of ignore what the markets are doing daily, because you'll get stuck in this fear cycle and it's really going to ruin your commitment to stay in for the long term. Number two, what a lot of people end up doing is when the markets start going downwards, they sell. And it really goes against the entire philosophy of increasing your net value. So essentially what people do is, unfortunately, this is unfortunately what I've been seeing my entire life, is people buy when there's a whole bunch of excitement in the market. So when everything's going really high in the market, people buy at that point. And then when the markets slide downwards, people panic and they sell. So what did you do? You bought up here and you sold down here. That's not very good, because what you're doing is you're losing money in that regard. So what you want to do is you want to buy low. So for example, today is August 10th, 2021. The markets have taken a bit of a downward spiral here in Brazil overall over the last several weeks and couple of months. I would suggest, and this is not financial advice, that's my disclaimer, if you want financial advice from me, there's links down below in the description how to contact me on a professional level. But essentially the philosophy really should be, don't panic sell, okay? Because people will see markets sliding downwards and they're like, oh my god, it's going to go to zero, and they start panicking. But just remember, if you're in good solid hands and good solid investments and your goals and you're committed to them, there's no reason to panic sell, okay? So last but not least, that tip number 9 is very, very important. It's a psychological game, unfortunately, for a lot of people. But if you can just stay the course, look at things in a very practical way, when the markets are down, that's good. It's discounted. It's a good time to actually invest money. When the markets are up, that's probably a good time to shave off a little bit of profit for yourself. And, you know, depending on what your goals were from tip number 1. So, listen, never panic, I guess, is can go very well with the stay committed tip. So, listen, that concludes this video for today. It's a little bit of a long video, but for you beginners, really stay tuned. Please subscribe to the channel. If you want to have a conversation with me directly, all of my credentials are below. I am a credentialed assessor here in Brazil. I work in the city of Rio de Janeiro, but I also work in Sao Paulo and Belo Horizonte as secondary areas where I cover. So get in contact with me below. But in the meantime, I hope those 9 tips are of great help to you. And for now, I'll say so long. Subscribe, tap the bell, and you'll be notified of all my future videos. Thanks again.